Let's welcome on board Rajeev Agrawal. He's right here in the studios with us and figure out what he's making of not just India, but the globe as well. Rajeev, so good to have you here in the studios.
It
welcome
is wonderful.
to India.
Thank you. It's wonderful.
So
to
what's
be
the
here.
chatter like? Because all the action seems like is happening in the US right now, and it's really the dollar which is sort of pulling the reins for emerging markets also.
Yeah. No, I think it is the fact that Trump inauguration is next week will be interesting to see how the policy measures that everybody has been talking about will start showing up. And in fact, Trump is talking about weaker dollar. So the fact that the dollar is running up and yet Trump is trying to encourage more exports out of the US, it will be interesting to see whether Trump policies impact the dollar strength that we have been seeing for the last few
But is
months.
it going to be as simple as that? If dollar eases off, will the money move to emerging markets like India? Or do you think India's problems with sort of slowing growth, inflation challenges, and earnings getting dented as well, that also will have a role to play?
Absolutely. I think all of that will have a role to play. My view is that Indian markets ran up a lot, and we will see some consolidation, which is what we are starting to see now. In addition, I do think that it is important for us to ensure that, well, not for me, but for the markets to think about where the earnings will be going forward. And from an earnings perspective, I think the economic growth has been very weak. And so unless the economic growth starts, and one of the drivers would be the government and the government capex, which has been very weak. From whatever I'm seeing and listening to some of the politicians talk about it, my expectation is capex should start picking up. And as that picks up, I would expect Indian economy to do well and the growth to come back again on the earnings side.
But Rajeev, the major question is that when do you expect the Indian economy and especially the corporate earnings growth to pick up? And given that you are anticipating a weaker dollar, tell us what are the sectors that you are eyeing on, because it was just a while back we were chatting about that long-term growth story.
Yeah.
So where are the opportunities?
So actually some of the opportunities in my mind are the sectors that we were just talking about, which I have been beaten up, which is banking and finance. I have been a big bull on that. One of the reasons for the weakness has been the stress that has built up in the last few quarters, as the MFI has not done well, the personal loans, the credit card, all the unsecured loans have not done well. And today we saw Axis Bank being down so dramatically. So clearly that is an area where the prices have come off significantly, and they have come off because the earnings have been weak. But I would expect that over the next few quarters, as that weakness tapers off, the earnings will once again become visible, and so will the opportunities and therefore the growth in the prices. And that is what we are looking forward to. We think India as a story is a very strong credit story, because there has been weakness in credit for the longest in terms of the opportunity of using credit and growing the economy. And as the capex comes up, as the monsoon has been good, we would expect that the rural will be stronger, and that will drive all the growth across the economy.
But does that make you hesitate a bit putting fresh money right now?
Actually, it's interesting, when the markets become weak, that is when you want to put fresh money. And what has happened is Q4 of last year was very weak, right? The Nifty is down 8-9%. And so, in fact, in Q4 and even in January, we have put some more money to work, because that is where we are finding bargains now. Because when the narrative turns negative is when the opportunities become more interesting to us. So that's how we are looking at it.
Sure. But Rajeev, the question is, do you ride on the same horses when it comes to financials? Is it still going to be private banks and HDFC Bank and ICICI Bank? Or would you look at diversifying to NBFCs, or for that matter, even insurance? I mean, look how strong the numbers were from HDFC Life, and I can see SBI Life numbers as well flash on the screens. The net premium income has jumped up.
Yeah.
And I was just looking at the PAT figures as well. They're significantly higher than what the street was anticipating at 557 crore rupees, I think. Those numbers look quite okay. We will, of course, have to deep dive, but I'm just looking at, optically what the numbers are, throwing up right now. The stock, of course, ran up, saw a rub off from HDFC Life's earnings, and right now as well, you can see a climb up on SBI Life. So do you diversify now and spread your legs when it comes to the financial space as a whole?
Yeah, no, so I think the private banks have been a long-term story, but maybe there are better values in the NBFCs and the MFIs. And the reason is MFIs, some of them, that if you look at, they have been beaten up very, very badly. So, I mean, I will give you some names. Obviously, these are not recommendations. But if you look at like Spandana, it is down 60% in the last 3 to 6 months, and we own it. So it is not recommendation, full disclosure. So I think some of them have come down dramatically, and they have come down because the business have been very weak. So the question then is not what happens next year. We are not looking even what will happen next year, because we think a few years out, they could become interesting. Because yes, the weakness is not going to go away in a quarter or two. We think the weakness will go on possibly for all of 2025 in terms of getting back to the old numbers, right? Because the bad credit will play through the quarterly numbers. But we think by end of 2025, a lot of that pain would be addressed. And therefore, you would then start seeing in 26, calendar year 26, you start seeing some more improvement in the results, which will then reflect in the stock price. So one of the ways that we differ from what the street does, and which I think is very important, is that we don't try to make a decision based on what is happening now or in the next quarter or even the quarter after next. We try to look a few years out. And what that helps us do is be differentiated in terms of our viewpoint versus what the market is. Because markets are much more focused on very short term, which is 3 to 6 months. We try to take 2 to 3 years out view. And so MFI, now going to the insurance sector, I think that sector clearly has a very long runway. The question then is whether that long runway is something that we can benefit from in terms of the stock price. Because that is where we have to say what the earnings growth will be. And in general, what at least we have found is that the earnings growth of the insurance sector is pretty well baked into the price that the stocks are trading at. So even though they might have come off some, we feel that at this price, they're not as compelling as something that we are seeing in the NBFC and some of the smaller banks.
All right, Rajeev, great to know your take on the MFI space. We'll try to take this discussion forward, but for now, viewers, it's time to step into a very short break. Don't go anywhere. As we come right back, more experts joining us on the other side.
Back with closing trades, still in conversation with Rajeev Agrawal right here in our studios. But let me quickly, welcome on board Naresh Mirani as well and figure out what he's making of this volatility, if you will, in the markets. And Aditya Agrawal as well joins in. Gentlemen, hi. Welcome to the show, both of you. Naresh, afternoon. What is it that you're making of the market move today? I mean, of course, today is a big function of the way, the tug of war between Reliance on one hand and Axis and Infosys on the other hand is playing out. But what's that telling you about the Nifty structure?
So the Nifty is down, the bank Nifty is down 1.5%, Nifty is down 0.25 to 0.5%. But when we look at the broader markets, we have advances greater than declines. You have the mid cap index barely a little positive, your small cap almost positive or on the flat line. So the breadth is much better than what is happening because of the few heavyweight numbers. And this is what should continue for the next 2 weeks, wherein we keep seeing volatility due to results. And there would be, say, big gap ups and gap downs on numbers. But overall, the broader market is still looking good. And we are shaping up for a bounce on the indices as well. Globally, we are hitting new highs on DAX and European markets as such. So structurally setting up for a bounce.
Setting up for a bounce. But hi Aditya, very good afternoon. Welcome to the show. Help us understand what are you looking at right now, because there's no select pocket that is showing great movement, at least for today, but it's the metal pack, at least what I can spot. Stocks like Tata Steel, Hind Copper, they are doing well. And like a while back, Rajiv was also highlighting that the commentary that we have till now is suggesting for a weaker dollar. So do you believe in any of these metal stories, any stock that is looking attractive right now?
Thanks for the show. Good afternoon. There is a bit of a pop for sure in a lot of these metal stocks, Tata Steel, JSW Steel, Hindalco, NMDC. There is a bit of a trading pop, but this is the first day of recovery of sorts to say in all of these stocks. I would give it one more day at least and see if the trend is intact and we see a follow through buying in trade tomorrow, maybe Monday, in these stocks, Tata Steel, JSW Steel, NMDC and Hindalco. All four stocks for me looks like there could be a short covering rally, but I would wait for a confirmation on Monday. The two stocks that I would particularly bet on, Tata Steel from here on, I think can test levels of 140 on the upside, support on the downside at 145. JSW Steel, I think, again, is a candidate for a good short covering rally, can test levels of 960 on the upside. Talking of NMDC, I think this is one stock which is up back to back 2 days. Yesterday also it was up in on decent volumes. So 72 could be seen on NMDC as well. So the three stocks I would keep a close eye on, but take a trade on Monday. Today, I wouldn't be too interested in taking a trade in metal, just say.
Okay. Rajiv, just coming back to the discussion that we were having, other than financials, what's looking interesting where you do have that kind of growth visibility, and now with the recent correction, some valuation comfort as well.
Yes, I think one area which I feel is very interesting still is capital markets. So you look at clearly as the market has pulled back, some of the wealth managers, right, have actually also pulled back. But the fact is, Indian capital market story is going to continue for a very long term. And again, going back to my comments of saying that, listen, in the short term, we are not really focusing as much. But if I look a few years out, I think the capital market story, the amount of inflows that we are getting will continue. And therefore, Indian capital market players are quite consolidated. So most of that opportunity will show up among these players, right? And so that is one interesting area. I think renewable energy is another interesting area for us. We have been in that space for a little while, and we think renewable energy, because it is quite cost competitive versus the traditional form of energy, I think will continue to be very interesting, not only from an environment perspective, but also in terms of the cost competitiveness. And so I think that is another area. And then,
but sorry to interrupt you there. That's a very big supply chain. What within renewable energy is looking good?
So I think in renewable there are two ways right now, either solar or wind. Within that, we like wind more than solar, and the reason is solar has many players, and also the ability to get into solar is much more easier, right? While wind takes a lot more time to get certified and to be able to put the wind turbines out there. And so that is what we like, because we think that in wind, if you look at the wind energy segment, there are only a few players. So we like to be invested in segments which are consolidated and where the entry of new players is not that easy, because that is what will allow us to make good returns over time.
All right, that's interesting to note. Maybe wind, the counters related to the wind renewable energy is something that Rajeev is liking at this point in time. But with this, viewers, let's do one thing. Let's once again slip into a very short break. But as we look at the markets, there seems to be a bit of a recovery from the day's lowest point. What we are spotting on Nifty as well as Bank Nifty. But don't go anywhere, more action on the other side of the break.
Back with closing trades, Dietary on 89. Let's just see where the markets are settling in at. That little bit of closing volatility definitely playing out. It's really been a manic week. I think, today doesn't really do justice. We should play out the week-to-date chart or the last 7 trading sessions, because that will give you the true picture of what the market has been through. Starting off from where we left it off last week to where Monday was when you saw that big gash. And then from there, you've seen a little bit of a recovery played out. But still, we're down about 224 points for the week gone by. And I think more stark would be the picture for some of the other sectoral players like a Nifty Bank, for instance, even real estate, which really got clobbered on in Monday. And that's, 2.5% lower for the week on the Nifty Realty Index alone. But we still got Rajeev Agrawal right here in the studios. So Rajeev, financials clearly is that big theme. You talked about renewable energy as well. What else is looking good? Or actually, let me, pose the question in a different way. What is it that you would completely avoid and not touch in this market in India?
Yeah, so I think we actually go a lot by how the stocks are valued. And I would say a lot of the capital expenditure companies, because of this narrative that India will continue to have very long term, like you look at, for example, the TD Power and stuff like that, where they have just the transformer, all the entire transformer group, they have done very well, because everybody said, well, electricity has to be generated, but the multiples don't make sense. And so our view is, all stocks are good at certain prices and all stocks are bad at certain prices. And so if I look at like the ABBs of the world, the real capital NTPCs and stuff like that, they have run up a lot because of the India story. And so our view is, market is so big, we don't have to be in all the segments. In fact, we always say that we will concentrate into sectors which are interesting to us. And we are very happy to let go of sectors which we don't find enough value in. We ultimately are a value investor, but that means that the way we define ourselves is growth is very important part of the value, and we try to look at what the value will look in a few years and then look at our expected returns.
So CapEx is that one theme, what else?
CapEx is one theme. Then you look at the fast moving consumer goods. They have not done well. So it's not like the prices are at highs, but the issue is the growth is very weak. So now, should you still justify a 50 times multiple, which you will have in many of these fast-moving consumer goods? And there was a narrative that no price is high enough for them. Our view still is that unless the consumption starts improving, even these valuations are not necessarily as justifiable. So we would not want to touch the fast-moving consumer goods. We will still not want to touch many of the plays where, you look at the infrastructure boom that has been going on, right? Now, in that, I would say like a metal stocks and stuff like that, maybe there are pockets of opportunities, because one thing we always have to realize is a lot of the businesses are commodity businesses. And when you are dealing with a commodity business, you cannot give it the highest, you cannot take the highest earnings of a cycle and then put a multiple on it, because you know that those earnings won't last, right? And therefore, it is very important that we normalize the earnings, and you say with those normalized earnings, what should be the valuations, right? And so I think a lot of those segments, and 2024 was a great year for the mid and small cap. So you have to be very, very choosy in the mid and small cap, because a lot of those valuations would not make sense to us, right? I mean, these are small companies and they trade at 30, 40 times earnings on a business which will grow at maybe 10, 20%, but they're very risky businesses because they're small businesses. They don't have the niche that you would expect them to have. So what we try to do is to look for niche businesses which can grow well, very concentrated players, and we think they have good returns on capital, so that they can continue to self-sustain themselves. So that is sort of how we look at it.
Sure. What about the entire consumption theme? Because that has always been India's peg point. We did discuss staples, but other than that, the entire premiumization story, is it still a structural story, or do you think when it comes to at least stock prices and valuations, the best is behind us?
So our view is that the premiumization will continue. I think it's a great long-term story. But the question then is not whether the theme will continue, but given the theme and given the current valuations, are they a good stock opportunity? And that is how we are thinking of them. So like you look at the Diageo and you say, listen, it is trading at 60, 70 times multiple. Is that a multiple that I would be willing to pay? And many times it's not about whether the business is a good business, but is the price good enough, right? So it's more of trying to be very careful with where the price is versus what we think the value is. And being conservative, we have to many times exclude some of these market darlings.
Absolutely. But great having you in the studios today. Thank you so much for your time.
Great. Thank you.
Well, definitely great chatting with you, Rajeev, and we also understood the themes that you're working with. But with this, let's move on and let's also